Elon Musk is back at the center of a financial milestone that has never happened before. SpaceX has officially priced its public offering. The company is moving onto the Nasdaq under the ticker SPCX, and new calculations now place Musk at or near the first trillion-dollar personal fortune in modern history. But the headline raises a bigger question than one number. Did the SpaceX IPO itself make Elon Musk a trillionaire, or does that title depend on how the market values SpaceX once trading begins? That is the part that matters most, because this is not just a story about one billionaire getting richer. It is a story about SpaceX leaving private markets after years of speculation, about Wall Street trying to price rockets, satellites, artificial intelligence, and Elon Musk's personal influence all at once, and about how a single stock market debut can reshape the leaderboard of global wealth in one trading day. For verified entertainment updates without the rumors, subscribe to Startline Entertainment. The latest confirmed update is this. Space Exploration Technologies Corp., better known as SpaceX, priced its initial public offering at $135 per share. The company said it would offer more than 555 million Class A shares, with trading expected to begin on June 12, 2026, on the Nasdaq Global Select Market and Nasdaq Texas under the ticker symbol SPCX. The offering was expected to close on June 15th, subject to customary closing conditions. That official pricing put SpaceX at an estimated valuation of about $1.77 trillion and made the offering one of the largest stock market debuts ever recorded. Reuters reported that the IPO raised $75 billion, making SpaceX immediately one of the most valuable publicly listed companies in the United States. That is the verified business update behind the celebrity headline. But the reason the story moved from the finance pages into mainstream celebrity and culture coverage is Elon Musk's personal stake. Musk's wealth has long been tied to companies that are difficult to value in a simple way. Tesla is public and moves every trading day. SpaceX, for most of its history, was private, meaning its value was based on fundraising rounds, private share sales, and investor estimates rather than a public market price. Once SpaceX priced its IPO and prepared to trade publicly, the value of Musk's stake became much easier for wealth trackers and market reporters to update. That is why people described Musk as officially becoming the world's first trillionaire after SpaceX went public. Reuters also reported that the SpaceX IPO made Musk the world's first trillionaire, calculating that his stake in SpaceX, along with Tesla and other holdings, would push his net worth beyond $1.1 trillion when the stock began trading. At the same time, Business Insider, citing Bloomberg's wealth calculations, noted an important nuance. At the $135 IPO price alone, Musk's net worth was estimated at about $971 billion, meaning SpaceX shares would need to trade above roughly $140.71 for that specific Bloomberg calculation to cross the trillion-dollar mark. That difference is not a contradiction so much as a reminder of how extreme wealth is calculated. A billionaire's or trillionaire's net worth is not the same as cash in a bank account. It is usually a market estimate of ownership stakes, stock options, private holdings, public shares, and sometimes future vesting conditions. If the share price changes, the number changes. If the calculation includes certain vesting components, the number changes again. That is why some outlets frame Musk as officially over the trillion-dollar line, while others described him as approaching it at the IPO price and crossing it once SpaceX traded higher. The simple version is this. SpaceX's IPO created the market event that made Musk's trillionaire status possible. The exact number depends on the share price and the wealth tracker doing the math. But the broader milestone is clear. SpaceX is now valued at a scale usually reserved for the largest companies in the world, and Musk's ownership position gives him a level of paper wealth no individual has publicly reached before. To understand why this IPO matters, it helps to look at SpaceX's unusual place in Musk's empire. SpaceX is not just a rocket company anymore. It is widely associated with launch services, spacecraft, Starship development, the Starlink satellite network, and newer ambitions tied to artificial intelligence infrastructure. Investors looking at SpaceX are not only pricing Falcon rockets or Mars dreams, they are trying to price a company that has become a major space launch provider, a satellite internet operator, a government contractor, and a long-term bet on technologies that may take years or decades to fully mature. That is why the IPO attracted enormous attention. Reuters reported that the offering immediately placed SpaceX among the largest U.S.-listed companies, ahead of many established corporate giants. It also reported that the deal broke the previous record held by Saudi Aramco's 2019 offering in raw proceeds. A company that spent more than 2 decades as a private business had suddenly become a public market giant on day one. But that size also created the next question: is SpaceX worth it? Some investors see SpaceX as a rare company with real operations, visible demand, government and commercial customers, and a founder with a history of turning improbable projects into dominant public narratives. Others see the valuation as aggressive, especially because the company's reported revenue is far smaller than the revenue of many companies with similar market capitalizations. Reuters noted that SpaceX generated $18.7 billion in revenue in 2025, and that its market cap implied a very high price-to-revenue ratio. That kind of valuation means investors are paying not only for what SpaceX is today, but for what they believe it might become. And that brings the story back to Elon Musk. Whether viewers admire him, criticize him, or simply follow him as a major public figure, Musk's name has become a market force. Tesla's rise already showed that investors sometimes price Musk-led companies on future possibility as much as current fundamentals. With SpaceX, that same pattern is happening again, only on a much larger stage. The IPO is not just a listing, it is a test of the so-called Elon premium, the belief that Musk's track record, vision, and public influence can justify valuations that traditional analysts may struggle to explain. Still, SpaceX going public also changes the public scrutiny around the company. Private companies can operate with fewer disclosure obligations than public companies. Once public, SpaceX will face a different level of investor attention, regulatory disclosure, earnings pressure, analyst coverage, and market reaction. Every launch delay, Starlink update, government contract, regulatory issue, or major Musk statement could now become part of the stock's public narrative. One of the biggest confirmed governance details is Musk's continued control. Public reporting on the prospectus said Musk would retain overwhelming voting power through a dual-class share structure. That means the company can sell public shares while still leaving Musk with central control over corporate direction. For supporters, that continuity protects the long-term mission. For critics, it concentrates too much influence in one person, especially in a company now valued at more than $1 trillion. That tension is one reason the SpaceX IPO is more than a wealth story. The company's listing raises questions about public market appetite, retail investor demand, technology valuations, and the future of mega IPOs. Reuters described the SpaceX debut as a possible test for other major listings, including large artificial intelligence companies expected to come to market. If SpaceX trades well, it could encourage more late-stage private companies to go public. If it stumbles, it could make investors more cautious about paying extreme prices for future growth stories. For Musk personally, the Trillionaire headline also lands at a complicated time. He remains one of the most influential and polarizing figures in business, technology, and online culture. His supporters point to Tesla, SpaceX, reusable rockets, Starlink, and his willingness to take risks that established industries once dismissed. His critics point to governance concerns, political controversies, public feuds, and the risks of so much economic and cultural influence being tied to one individual. That is why the public response to this milestone is unlikely to be one-sided. Some will see the first Trillionaire headline as proof of extraordinary innovation and ambition. Others will see it as a symbol of wealth concentration and market excess. Both reactions are part of the story, because Musk's wealth is not just a private financial number. It has become a cultural signal that people use to talk about technology, inequality, risk, power, and the future of the economy. What should not be missed is that this is still mostly paper wealth. Musk did not receive $1 trillion in cash. The number is tied to shares and holdings whose value can move sharply. If SpaceX trades higher, the number rises. If SpaceX falls, the number can fall quickly. That is why the cleanest way to describe the update is that the SpaceX IPO pushed Musk into trillionaire territory by public market calculations, but that status remains tied to market pricing and ownership assumptions. There is also a major difference between a financial milestone and an investment recommendation. SpaceX going public does not automatically mean the stock is a good buy or a bad buy. It means public investors can now price the company in real time. The excitement around a debut can be very different from long-term performance. Some historic IPOs surged early and later struggled. Others looked expensive at first and grew into their valuations over time. SpaceX now has to prove itself not only through launches and future promises, but through public company performance. The timing also matters. SpaceX entered the market during a period when investors were intensely focused on artificial intelligence, infrastructure, satellites, and next-generation technology. That backdrop helped create the conditions for a massive listing. But it also means expectations are extremely high. A company valued at nearly $1.8 trillion does not get much room for ordinary execution. It has to keep convincing investors that its future markets are enormous enough to support today's price. The confirmed numbers tell one side of the story: 555 million shares, $135 per share, $75 billion raised, a $1.77 trillion valuation, a NASDAQ listing under SPCX, and a founder whose ownership stake has pushed him into a financial category no public figure has reached before. The unresolved questions tell the other side. How will SpaceX trade after the first day excitement? Will public investors accept a valuation that depends heavily on long-term space, satellite, and AI ambitions? Will Musk's control reassure investors or concern them? And will the trillionaire headline hold as the stock begins moving like any other public company? The Startline takeaway is this. The headline is historically significant, but the smarter story is not just that Elon Musk became a trillionaire. The smarter story is that SpaceX's public debut turned a private market valuation into a public test. It turned Musk's ownership stake into a daily market calculation, and it turned one of the most ambitious companies in the world into a stock that millions of investors can now judge in real time. So yes, the SpaceX IPO has pushed Elon Musk into trillionaire territory according to major public reporting, but the number itself should be understood as a market estimate, not a pile of cash. The deeper development is that Musk's biggest private company is now entering a new era where its valuation, risks, promises, and performance will be visible in a way they never were before. For now, the verified update is that SpaceX has priced and launched a record public offering. Musk's estimated fortune has reached a historic threshold by Reuters calculations, and the next chapter depends on how public markets handle one of the most expensive and closely watched debuts in modern financial history.